Okay. Good morning, everyone. Welcome back to the loudest 120 minutes on the internet. If you are just waking up on the East Coast, grab your coffee, crack open that laptop, put up the broker. If you are in London, grab a beer. You have earned it. If you are in Asia and are still awake at this hour, massive respect. Let's make this worth your sleep. If you are driving to the office right now, keep your eyes on the road and your ears right here. And if you are a student skipping class to watch this, I'm not endorsing that behavior. But I see you, and we are going to make sure you learn more in the next 2 hours than you have learned in a semester of intro finance. Okay, I'm James. It's Friday, April 17, 2026, and I'm gonna tell you something right here about the stock market. Well, the theme of tonight is stock analysis in a professional way. So, if you have any questions about your portfolio, about the stock you are holding, or even about the stock you are expected to buy or sell, you can ask me any question about it. Okay? So you just show me the code. You just give me your code, and we will give you a professional diagnosis, especially in a technical way. Okay, any question, my friend? This is a happy Friday night, right? Most of us are hanging out, drink beer, dating with beautiful girls. Okay, if you don't have any question right now, I will keep talking about what I'm gonna share with you tonight. Well, the tech is doing something historical, especially from March to April, right? And most retail traders are still sitting on their hands because they get their faces ripped off in March. That's the single most important sentence I'm going to say in the next 2 hours. So write it down. Opportunity is showing up just as risk, and most people are refusing to open the door. Okay, let me set the scene. We can review the market yesterday, Thursday, April 16th. The S&P 500 closed at a record high for the second straight day, right? The Nasdaq, 12 green days in a row. 12! This is the longest winning streak since 2009. Now think about what was happening in 2009. We were climbing out of the bottom of the global financial crisis. The generational low. The single best entry point of any of our lifetimes. And here we are in 2026. And the tape is printing the same kind of relentless persistence. That's not a coincidence. That's a signal. Okay, let's take a look at the trading view. I'm gonna see the index. Alright, let's take a look at the index, S&P 500. It just reached the historical high, right? What a beautiful rebound from the bottom. Let's take a look at the Nasdaq. Composite index. As beautiful as the S&P, right? So this is the signal. Now, and I want everybody to hear this part. I want the algorithm to hear this part too. A streak like this does one of two things. Either it is the middle of a much bigger move, and the late Monday is finally waking up and chasing, or it is the classic blow-off top where the last buyers gets caught holding the bag. There's no third option. Our job this morning is to figure out which one it is, and now, more importantly, to build a playbook that works in both scenarios. Because here's the thing, and stop me if you have heard this before, the material bets on the outcome. The pro positions for the process. By the end of this stream, you will know exactly what I am watching, where I'm entering, where I'm stopping out, and why. So come on, just show me your code. Alright, before you tell me your code, I will keep talking about our theme tonight. Yeah, you ring the bell, drops a comment telling me where you're watching from. I love seeing the map light up. Yeah, just click the link and join our group. You will learn more about your portfolio. Okay? Okay, let's take a look at the macro wrap. Why stocks read yesterday? Why stocks read yesterday? Well, yesterday's move was not random. Stocks do not rally on the Nasdaq for no reason. And if you don't understand why the tape moved, you have zero chance of predicting what it does next. So we are going to break it down. 3 things, light the fuse. Write them in your notes, okay? Oh well, somebody asked a question. Sir, how about XWIN? Okay, let me take a look here. XMAX, right? XMAX. Firstly, we look at the long-term trend, weekly view. Can you see that? This is the week chart. This is a weekly chart. First and the foremost, it is the upward trend, right? It is an upward trend. From the bottom here, it's going upward, right? Okay. Then we come back to the daily chart. The daily chart. Let's delete it. The price, the stop price is moving upside the simple moving average line, the 20 simple moving line, right? And the moving average line of 20 is the lifeline of the institutional investor. So every time, can you see that? Every time it breaks the SMA 20, it come back. Every time break, every time come back, every time break, every time come back, right? And now the stop price keep going higher, going record high. Is that right? And let's take a look at the RSI indicator. Several days, maybe around 2 weeks ago, it was overbought. It was overbought. But now the indicators is going down. It is not overbought anymore. What does this mean? It means that most of the traders who are profitable here have already sold most of their shares, and now it is prepared to go up again, because here is the support. The SMA 20 had a support level here. So we don't need to worry too much about it. But this is a meme stock, you know. The volume of this is not enough. The volume of this is not enough. So say take care of the liquidity. Okay. Okay, let's come back to our our theme. We just talk about that the macro. We need to know three things. Number one, the Iran peace trade. President Trump said on the record, and I quote, "We are very close to making a deal. A second round of negotiations is reportedly forming this weekend." Now look, I have been trading for over a decade and I have learned one ironclad rule about geopolitical trades. The rumor rips, the news fades. Just like what I said yesterday. Buy the rumor, sell the fact. That's the playbook. Every single time, Iraq in 2003, Brexit in 2016, trade war in 2018, COVID reopened in 2021. Same pattern. All of them are in the same pattern. Yesterday was the rumor phase, right? Oil gave back some of its war premium from the low 80s back into the high 60s. Cruise lines wobbled but held. Airlines flew. Discretionary ripped. That's the textbook playbook for a peace rumor, and the tech ran it to perfection. But here where most retail gets it wrong. They think the peace trade is about peace. It is not. It's not about peace. It is just about one thing. The removal of a tail risk. Well, when there's a 20% chance of a Middle East shooting war, fund managers carry hedge. They buy puts on SPY, long gold, long oil, long defense, right? When that probability drops from 20% to 5% overnight, every single one of those hedges get on one simultaneously. That's what you are watching. It is not optimism. It is mechanical de-hedging. Understand the plumbing and you understand the tape. Okay? What does it mean? Well, it is not just about peace. Let's take a look. We need to take a look at the oil futures. Where the oil dropped from the top, right? Is from top here to here, 500 to around 460. The trader trades the removal of a tail risk. So if the Middle East keeps the battle with the US, the oil will go up again because well, the hedge fund manager, the investor gonna hedge the risk, so they will buy oil, they will long oil or gold. Gold is going up for almost a month, right? For almost a month. Or some defense stock, military like Lockheed Martin. So if you don't ask me any code of your stock, I will show you. I will show you the stock I like. I like just like that. You know, the capital, especially the smart money, just like they know everything. Can you see that? The Lockheed Martin. Who is Lockheed Martin? It is the top company, of defensive, the top company of military, right? Just before the war is between US and Iraq, Iran. Before it happening, Lockheed Martin go up prior to the war. When the war going pause for a while, it break the upward trend and going down now. So we can see that technically Lockheed Martin has already a downward trend. It's not a upward trend anymore because it break here, break, right? Break the upward trend and going into a downward trend now. And here is a thing. Here is a signal. When the stop price going up, let me see. Let me show you. When the stock price kept going up, the RSI here from top, the RSI is going down. The RSI is going down. So this is the divergent. This is the divergent, which means the space to going out is limited. It's limited. So this time we need to sell. So I enjoy using RSI indicator. It's very useful. It's very useful, right? So some friends were asked, well, the war is not ending. The war between the US and the Iran is not ending, but the stock price got a downward trend. Does this indicate that the war will end soon? No, I don't think so. I don't think so. First and foremost, we need some information that fundamentally we need to pay attention. We need to notice the debate between Donald Trump and Iran. Secondly, still using the RSI here. The RSI is close to oversold, but still a distance, but it's close. It is close to the oversold zone here. So maybe several days later, the price of LMT will go up again. To break the downward trend, the short-term downward trend. Okay, number two of the stock market, the hot topic of the stock market is the TSMC, Taiwan Semiconductor, the single most important foundry company on planet Earth. It raised its 2026 revenue guide and now expect more than 30% growth this year on AI chip demand. Let me say that one more time for the people who are still half asleep. Over 30% top line growth from the company that physically manufactures the chip. NVIDIA designs, AMD designs, Apple designs, Broadcom designs. Every single one of those hyperscaler and fabless names depends on TSMC's Arizona, Taiwan, and Japan fabs running hot. If TSMC is guiding up, the AI capex cycle is not slowing, it's accelerating. And then when TSMC talks, the semiconductor complex listens. What I just said is all about the fundamental side of TSMC. So let's take a look at the technical side of TSMC. Well, there's no doubt that TSM is a great company, right? It's a great company. It is. Let's take a look at the weekly chart. This is a long-term upward trend. It just has a few drawback in the last several years, right? Yesterday it get a wonderful financial report, but here let's take a look at it. Technical analysis. First and foremost, with the beautiful financial report, the stock price didn't get the highest point, didn't break the record high, right? The record high is here. The record high is here, and now with the beautiful report, with the beautiful earning, it was going down yesterday, so it is not a good signal, which means that a great company doesn't have a good price, so we need to wait. We need to wait. The support zone is here. Let me see. The support zone is all right. It's around here, the support zone. First and foremost, the SMA 20. SM20. It's around here. And another support level at this point. So when the price go down to the first level here around 350, you can enter some of your capital. Then when it go down again around 320, it is better because the good company get cheaper, right? Here is the a safe zone. It has its safe margin here around this place. Okay. Oh, that's the single most bullish data point for the semi trade since the October peak. Yeah. And it is why SMS ripped, and it is why Nvidia closed near the high of the day. I want you to remember that the AI story is not a sentiment story. It's not just emotional. It is a capex story. Hyperscalers, Microsoft, Amazon, Google, Meta, Oracle are still spending a combined over $300 billion a year on AI infrastructure. That money has to go somewhere. It goes into chips, into data centers, into power, into cooling, into networking. Every dollar of that capex is somebody's revenue. Find the somebody, buy the somebody. That's the entire trade. So who's the somebody? Who is somebody? Yeah, I just show you TSM, right? But we need to do some timing job. Don't chase the price. We need patience. We wait the price getting into the safe zone. Then we can enter this great company. Understand? Fair enough? So I have already shown you 2 codes. How about you? Hi guys. So everybody is going out to dating on Friday. Is it? Okay, keep going. Okay, number 3. The third point of recent market, jobless claims. Initial claims fell to 207,000 for the week ending April 11th, down from 218,000 the week prior. I know claims data sounds boring, but here is why it matters and why I watch it every Thursday morning like a hawk. The labor market is the one variable that can single-handedly break a bull market. When people lose jobs, they stop spending, right? When they stop spending, retail earnings crack. When retail earnings crack, analysis downgrade. When analysis downgrade, the PE ratio, the PE multiple compresses. The whole tower comes down. It is a chain reaction and it starts with jobless claims. So the number tells you the tower is still standing. The soft landing narrative, the idea that the Fed can cut rates without a recession is back on the table. And the bulls needed that desperately. So put it all together, peace trade plus AI complex boom plus resilient labor market, that's your three-leg stool. That's why the S&P closed at a record. That's why the Nasdaq cleared 24,000 for the first time ever. That's why the Dow is grinding higher. The Russell 2000 is participating, and the breath, which we will talk about in a few minutes, is actually broad. This is not a 5 o'clock rally anymore. This is what a real durable breakout looks like. Whether it continues another week or ends today, we will have clues by around 9.75. Oh well, question again. The Nasdaq 12-day streak. Someone say this is just a bubble. What do you think? Oh well. Wait a minute. Let's take a look at the Nasdaq. Let's take a look at the Nasdaq. Nasdaq Composite Index. Wow, what a beautiful upward trend, break the record high. Look, price action doesn't lie, right? The price action tells us everything. Yeah, sure, I also get the bubble anxiety. We are seeing massive momentum, but bubble is a heavy word. Until the technical breaks, or we will see a blow off top on huge volume. Yeah, it breaks the historical high. You don't fight the trend. We don't need to fight the trend. The trend is going up. We don't fight the tape. Okay? Stay objective. Just stay objective. Trade the chart in front of you, not the headlines in your head. Yeah. Obviously, the RSI indicator implied that it is almost overbought, right? It is in the overbought zone now, but we don't fight the tape. We can keep our cash. We don't need to chase the price, but it is not. If we have a correction back, maybe back to 23,000. But it's not bubble. Because what is bubble? Bubble is like that. Here maybe is the bubble. If correct for more than 20%. So here it is difficult to correct for 20%. It's maybe go down around 10% or 5%. Yeah, of course it's a big correction, but it is okay. It's not a bubble. Okay. Yeah, this is my answer. Wait a minute. Okay, I'm gonna type the answer. Okay, the tape tells you everything, right? Before we get into the move, we want the job. I will drop a principle on you because you can memorize every ticker I'm about to mention. But if you don't internalize the principles behind the tickers, you will give it all back in the next drawdown, guaranteed. Okay, principle number one, the tape tells you everything. Okay, let me show you the presentation. Okay, let's take a look. The tape, I mean the market, the price, the stock price tells us everything. So we need to pay more attention to the price action. We don't care about what CNBC says. We don't care what the perma bears on Twitter say. We don't care what some hedge fund manager says on a broadcast he recorded 3 weeks ago. Price is truth. Everything else is opinion, including mine. Okay, including mine. Everything is opinion. So we need to be objective about the market. Let's come back to the market. Let's come back to the view. Okay. Let's take a flashback to the Nasdaq. Here, obviously, here is a downward trend, right? It is a downward trend. We have no idea where it would go down, right? We have no idea where it would go down. But here is a break. It's a breakthrough. First and foremost, it break the downward trend. Secondly, it break the SMA 20. So we don't need to catch the life here. It's dangerous. But here it's for sure that the trend is turned. Here is the turning point. So even though you enter Nasdaq here, it look high, but it's not not high because you just follow the trend. You you just being objective. You follow the trend, enter the market here, then you can eat the big meat. You can eat the big meat. Understand? So we need to pay enough attention to the price action. Let me tell you a story. October 2022, 22nd. Every single newsletter on the planet was calling for SPX 3000, maybe 2800. The narrative was sticky inflation, rolling recession. The Fed was going to break something. Credit was about to crack. Sentiment was in the absolute gutter. Retail was fully hedged. Hedge funds were net short. And guess what? The tape bottomed on October, and from there it ran 50% over the next 18 months. Sorry. Okay, let's take a look back at. Yeah, here, around here. Yeah, here is a double bottom. The bottom. Everyone worried about the trend. Yeah, absolutely, it's a downward trend. We are doing a case study about the past. Okay, because you don't give me any questions, so I'm doing some. I'm doing some case study. Okay, now this is a downward trend. And then everybody here worried about the market, worried about the economy. But here is a very interesting signal. Here is a double bottle, right? And the RSI indicator gives you a divergent signal. Is this a divergent signal? The index is almost flat, but the RSI, the low point of the RSI is getting higher. So here is the bottom up signal. Okay, let's come back to the presentation. The same thing applies right now in reverse. Everybody wanna call the top. Every YouTube thumbnail has a red arrow and the word crash. Every macro tourist is tweeting about 1999 redux and the valuation bubble. And meanwhile, the tape is up 12 days in a row. Don't fight the tape, okay? Don't fight the tape until the tape tells you to. What does it mean? What does it mean by that? Don't fight the tape. I said it again and again. Yeah, you're welcome. You're welcome. Just show me your code, okay? I will keep talking. So let's get back to recent market. Here. the market uh, the markets keep going up, right? We don't need to short it. Don't fight the tape. The tape is going up. Just let the tape tell us that the trend is ending. Maybe it break the MA20 with volume, with huge volume. That's the trend. Just like here, the break and go downward. During these days, about 3 weeks, it's enough time for you to enter to short the index. So then you will eat the meat here, and then when it break up, you enter too long. It's also enough for you to earn, right? Well, another question. QCon was break up the EMA 240 in 1 hour here. Should we buy it? Let's take a look. Okay, sorry that there's no sound, right? I will analyze QCon again. First and foremost, can you see that? In the past few months, QCon is going downward, right? And now, this week, the price go up and break the downward trend. Here, break the downward trend. Secondly, the price is higher than the MA20. This is a very beautiful signal. So, instead, should we buy it? I think around 135. Yeah, it's a good choice. It's a good choice. Okay, let me reply it in. Well, another question. The S&P is at 7,022. Is 7,000 support now, or are we gonna retest? Yeah, psychologically, 7,000 is huge. Usually when you break a massive round number like that, the market likes to come back, and the case is to confirm it's now support. Let me take a look at the S&P once again. Let's take a look at the S&P. SPX, right? Yeah, 7,000. This is a good number. It's a very good number. Yeah, it is for sure that this round number like that, the market likes to come back. The cases like to come back. It's not very a very big range, so that's okay. It's okay. So if you hold, so if you hold S&P ETF, you just hold it. Let the tape tell you when you quit. So if you didn't hold anything about S&P, you just wait. You just wait the price come back. Yeah, you just wait the price to come back. Yeah. Sorry. Well, TSMC. You mentioned TSMC raised guidance 30%. Does that flow through to Nvidia, or is this already priced in? Yeah, sure. TSMC is the mothership for chips. 30% hike is a massive signal for AI demand. Is it priced in? Partially? Yeah, partially. Partly priced in. But Nvidia usually follows the lead. If the picks and shovels, the TSM, are selling more, the gold, Nvidia is likely still undervalued by the street. Okay, let's carry on. I just answered 3 questions. Let's carry on. Somebody also said that what about the valuation? Yeah, this is a good question. Here's my answer. Valuation is a reason, not a catalyst. The market can stay overvalued for 3 years. You know, the market can stay overvalued for 3 years. Valuation doesn't tell you when to sell. Price action does. If the trend breaks, you sell. If it holds, you ride. Stop trying to outsmart the tape. You will lose that fight every time. Alright, let's move on. Now let's go through the tape, name by name, sector by sector. I'm going to move fast, but stay with me because this is how I build my watch list every single morning. Tech led and the semis were the engine of the day. If you own, let me see. Let's come back to presentation. Okay, this is the review of yesterday's scoreboard. Everyone can read it on TradingView, so I don't repeat it again. And now we can see that the 3 fields through the market upward. The Iran peace trade, TSMC raised 2026 guide, claims dropped to 207K. And yesterday's big tickers, Tesla, Nvidia, well, Evoto, Netflix is going down. Yeah, the Netflix is going down. The CCL is going down too. All right, let's come back. Netflix. Let's take a look at the Netflix. The Netflix has a very beautiful report. All right. You can see all of that financial information on the internet. So I don't read them all to you. The most important thing is that it has a very beautiful and a surprise. However, you see, it goes down more than 9%, directly to the moving average 20, to the MA20 here. Actually, before that, there is a sign. There's a signal. Yeah, that's why I show you again why I love RSI indicator so much. Can you see that? The price going up, right? The price going up. But the RSI here is overbought. It's overbought. Just like here, it's overbought. Then we go down to the MA20. Here, the price going up is overbought again. It's overbought again. Then it go down to the MA20 again, right? So before the financial reports show us, we have the price action told us everything. So we need to pay more attention to the price action. So let's come back to the fundamental. Tech-led and the semis were the engine of the day, right? The TSMC was the catalyst, but what impressed me was not just that semis went up. What impressed me was the participation. It wasn't just Nvidia doing well, the heavy lifting. AMD up almost 8%. Let's take a look at AMD. Right? Wow, what a beautiful. I will show you another pattern. I like it a lot. I like a lot. Wait a second. It is just like cup. Does it? Doesn't it? It is like a cup. Yeah, this cup. And then here is a cup cuddle. And then here it is a historic high. It will keep going up again. And by the way, the RSI indicator didn't went into the overbought, so it still have some potential space to go up. All right, this is the AMD. Well, popular stocks like Broadcom, we just talked about that, and the MU are stable on the day. That tells you the rotation inside tech is healthy. Yeah, the tech rotation, right? From TSMC to AMD and to Broadcom. When one stock does all the work, that's fragile already. When the whole company participates, that's a durable one. Yesterday was durable, okay? And the Tesla up almost 8% the day before yesterday. Yeah, I need to show you the Tesla. Tesla go up a lot. Yesterday, the day before yesterday, right? And yesterday I also show you that it break the downward trend. They break the downward trend. So still today we can pay attention to that. We still can pay attention to Tesla. Okay. With Tesla, sentimental is a fundamental. Okay, sentimental is part of the fundamental. And Powell said no Fed put. What does that actually mean for me as a trader? It means the safety net is gone. The Fed isn't going to pivot and cut rates just because the market has a bad week. They are focused on inflation. For us, for trader, it means volatility is back on the menu and you need tighter stop losses because J. Powell isn't coming to save your long positions. Alright, the market is about to open. The market is about to open. Let's come back to the presentation. Open preview. Well, we can see that the gold is going up for 4 weeks, and the crude oil is getting pressure, and the oil is going down now, right? Equity is records in high record. Yeah, the dollar is soft. All right. This is the market recently. The watch list line is here. Let's pay more attention to the number here, the code here. Yeah, NYSE is very crazy. This stock is very crazy. Let's take a look. Yeah. My zoom. Hey, can you see that? What a crazy move. It goes up. It's just double in 1 day. Double in 1 day. Can you see that? Very crazy, right? What does this mean? What does this mean? Okay. You of course, I don't encourage you chase this stock. It just show you that some meme stock, some small companies will make you rich overnight in 1 night. Yeah, it just show you a phenomenon. All right, this these 3 buckets are still giving important influence on the market, on the stock market. First is the geopolitics, Iran weekend talks, okay, and second the earning, Netflix get a beautiful earning, but the stock price get down, okay. The third thing is the macro, Trump's post and the Fed whisper. Hey, come on, show me more code. Okay, if you don't have any question, let me show you the tools. 3 important tools, 3 technical tools that I use often. Well, these 3 tools is, first is the 20 MA, 20-day simple moving average. So you can see that. Let's change to another underlying. Just like NVIDIA. the most popular stock this year. You can see that most of the time I only use one moving average line. This is the 20 simple moving average. That's enough. That's enough. So when the trend is obvious, the stop price doesn't go down, go under the 20 moving average line, right? When it go under the 20 moving average line, it trembled. It was trembling, and then came back, and then come down again. Yeah, just like here, it's a very very strong trend because it break it with volume. So I didn't show the volume here. And the second one, the second one is RSI indicator, especially when it went divergent. Okay, let me put the volume inside. Okay. Let's change to another stock like Tesla or Netflix. Both are okay. You can see that. Let me show you again. First and foremost, price action. The price break the downward trend with volume enlarged. And then you see that the price here going lower and lower, but the RSI didn't get lower. This is what we call divergent here. Divergent. And this means that there's little space for the stock price go lower. So it has a big volume to make the price go higher and break the downward trend. The volume indicates that it is not just retail traders bought Tesla. It probably the institutional action. Because institutions have a lot of capital, right? So which make the volume larger. Fair enough? Come on. I show you a lot of code and I give you a lot of professional diagnosis of the stock. So please don't hesitate to click the link and join our group. Being our member, you can trade more rational. So no more emotional again. No more gambling. You just trade in a very professional and rational way. Any questions? My friends, any questions? Yeah, there are 3 tools I actually use. I use a lot, and it is very enough, enough for us to use. And when you acquire these 3 tools, you have already win over 90% traders, especially retail trader. It is enough for you to be professional. Okay. And there are also 3 rules in trading. Trading is not about being right, it's about being profitable. These rules are non-negotiable. First, 1% risk per trade. Sounds like you are wrong. Your position size comes from your stop distance, not from your conviction. Alright? Second, cut losers fast, let winners run. when the stock you buy is getting loose, which means that you are getting wrong. So quit, just quit. When your stock is profitable, which means that you are right. Okay, so keep the winners, keep the winner. The third rule is no plan, no trade. Just plan our trade and trade our plan. When and where to entry, when and where to stop, and what's our target before we click. Okay. Yeah, the oil price is jumping down. Let's take a look at the oil. Yeah, I can see that too. It's going down. It's not going down a lot. That's fine. That's fine. It's not going down a lot. Actually, it is an optimistic thing. It is an optimistic signal because of the oil price is going down. Why? When everybody enter the oil, which means that the war is getting more fierce, right? So means everybody want to hedge the risk. So they are going to buy oil. They are going to long gold. So now the oil price is going down. It is better. It is good for the stock market, for risky asset. Okay, we can see that here. Let's take a look at the FineVis. Then when the stock market opening, we will know the trend is still going up. Okay, before the market open, I will show you a mini lesson how to read the sector there in 10 seconds. Okay, step 1, check the leaders. Which sector ETF is up the most? SLK, SLC, SLY. This is the leading. Let me show you in the trading viewers again. Can you see that? SLK. This is an ETF. SLK is a technology select sector ETF. Alright. Then XLC. This is a communication service. And XLY. This is a consumer discretionary select sector. So 3 of them, when they are going up, offense is on the field, risk on, growth is in control. Let's take a look. Is that right? Going up a lot in this week. SLK, right? This is the technology sector going up a lot in this week. XLC, communication service going up a lot. They're almost on the same steps. So when 3 of them is leading, which means offense is on the field, risk on, growth is in control. In other words, SLU, utilities sector, where it's going down in this week, right? And XLP, yes, it's very weak this week. And XLV, healthcare, right? Consumption, healthcare. So when XLU, SLP, and SLV leading, which means defense, risk off, fear is in the air. Let's tell you the risk appetite for the day in one glance. So just 0 seconds, 10 seconds is enough for you to tell if the market is offense or defense, is risk on or risk off. Okay, gold is at, it's on a 4-week streak. Is gold telling us something stocks are not? Let me take a look at the stock, at the gold. Maybe, yeah, probably. Hey, can you see that? This is the gold. Yeah, gold is the ultimate fuel gauge. When it decouples from real use and goes parabolic, it usually means big money is hedging against a black swan event or massive currency debasement. If gold keeps ripping while stocks are at all-time highs, be cautious. One of them is lying. What does this mean? What does it mean? Gold is always playing an important role as a hedging tool to the risky assets, just like the stock market. So when both gold and equity are both going up together, one of them must be wrong. One of them is lying. And now we can see that the stock index is break the historical high, right? But the gold doesn't go down. The gold is going up too. So we need to be cautious, right? Okay, let me answer your question in text. Another question, if Iran talks collapse this weekend, what's the first trade Monday morning? Oh, that's a good question. First move, of course, is energy and defense. Crude will gap up. Names like Lockheed or Northrop will see an immediate bite. I will also be looking at the VIX to spike. It is a classic flight to safety setup. Dollars and gold up, high beta tech down. Clearly? Crystal clear? So let me answer your question again. If Iran talks collapse this weekend, the first trade Monday morning should be energy and the defense. Energy is oil, alright? Pay attention to oil. Yeah, the oil is trembling this week. So if the Iran talk collapse, oil will go up again. And another one is defense sector. Just like what I have said just now, LMT, Lockheed Martin. Yeah, it's a dip. But it's not exactly downward trend. It's just like here is a rand. It didn't break the lowest point recently, right? So it probably go up again if the Iran talks collapse this weekend. Okay, and I would also looking at the rigs to spike. Rigs. Yeah. Maybe not this one. We need to go to the so index. Okay, volatility. Here we go. Come on. Yeah, this one. Yeah, when the market is getting panic, risk is going up. When the market is happy, it is going down. So if the Iran talks collapse this weekend, the market will be panicked again. Then the risk will going up. So but we can't trade the risk. It is an index, right? Is there any ETF or something like that for us to trade? Yeah, sure. VSX. Yeah, this is the underlying for you to trade the risks. Yeah, the underlying for you to trade the emotion of the market. The underlying for you to long the panics of the market. All right. Okay, let me answer the question in text for you. Text to you guys. Energy like crude oil, if Iran top collapse this weekend, pay attention to energy like crude oil, defense like LMT, and market emotion like VX. Fair enough. Well, I think my answer is perfect. Yeah. Any logic, any code, right? If you give me a logic, I will give you a code. Yeah, that's what I'm doing. I'm not gambling. I'm not gambling in the market. I'm trading the logic and data driven and the logic driven. That's what I'm doing. That's what I'm doing. So please don't hesitate to click the link and join our group. Okay, being our member. Just be our member. You will get a professional diagnosis of your portfolio, and you can get more extra code with logic. Well, let me share with you my investing principle. Plan your trade and trade your plan. What does this mean? Before I give you the movers, principle number 2. I fail you as a host and you have failed yourself as a trader. So if you YOLO into the code. Wait a minute. we take a look at the we take a look at the oil price again. Yeah, we can see that the oil price is going down a lot. The oil price is going down a lot, which means that the talk between the US and Iran is getting optimistic, right? This is getting optimistic. So people feel good about that, and the war is is gonna ending. Maybe pause for a while, maybe pause for several days. It's a good news. It's really a good news, especially it's a bad news for the oil price, but it is really a good news for the equity market. So let's take a look at the index. Yeah, historical high again, right? Keep going up. Let's take a look. Nasdaq, right? Yeah, keep going up. Okay. What's my stop loss discipline when we gap up into a record high? Oh, okay. Never chase the gap. Never chase the gap with our trailing stop. When we are in price discovery mode at record highs, there's no overhead resistance. All right. I like to use 2 ATR, the average true range trailing stop, or move my stops to break even as soon as the trace is in the green. Don't turn a winner into a loser. Okay, so never trace the gap. Get in the record high. Never chase the gap without a trailing stop. Waiting for a correction. Why aren't you chasing the open? Isn't that leaving money on the table? It depends. It depends. The first 15 to 30 minutes of the market open is amateur hour. It is pure emotion and a stop hunting. I wait for the initial balance to settle. I would rather miss the first 2% and have a high probability setup than get chopped up in the opening volatility. Yeah. Netflix is down 9%. When does it become a buy? Not a falling knife. Okay, let's take a look. Let's take a flashback to the Netflix again. Netflix. Netflix. Wow, going down a lot. Yeah, of course we don't need to catch the falling knife here. First, it breaks then MA20, right? It is not a good signal. It is not a good signal. So we need to wait. Second, here. This is about here. The support level is around $90. So just wait. wait till the RSI indicator falling into the oversold zone, which means the RSI is below 30. Then we will consider whether we should buy Netflix. Okay. Netflix price just broke the MA20. Come on. It is not a good signal. And it closed support levels is closest support level is around 19. Let's wait for the RSI reaching the oversold zone, where is under 30. Then we can think about it. Consider it. Okay, totally agree with sentiment. It's clear splitting right now. Yeah, sure. Never chase the gap with thorough trailing stop. Waiting for. Alright. Yeah, I almost answer all your questions. Almost answer all your questions. So any question? Let's take a look at the heat map.